What's up, guys? I'm Mike, the Everyday Money Guy. Today we're going to be talking about refinancing your mortgage. Guys, there's a multitude of reasons why you may want to refinance your mortgage. Maybe you're looking for a better rate. Maybe you're looking to lower the amount of years that you have left to pay on it. Maybe you want cash out of your mortgage, or maybe a combination of one or more of those options. What I want to talk to you about today is why this time in 2020, late 2020, could be the best time ever to refinance your mortgage. Guys, right now rates are at historic lows. So low that I would venture to say that we'll never see rates this low again. Another reason is that there is a new fee that has been delayed from September 1st to December 1st of 2020 called the adverse market fee that Fannie Mae is going to be assessing on refinance mortgages starting at that time. It was delayed from September to December, and we'll get to that towards the end of the video. Now, I said that the low interest rates and that they are the lowest that we will ever see. It's a bit of a bold prediction because ever since my home buying experience started in 2006, rates have been considered relatively low from the teens and higher of years gone by. The first mortgage that I ever had was 6.875% for 30 years. That was the best rate that you could get at the time in 2006. I had very good credit, we had a sizable down payment, and we were able to secure that rate and were ecstatic. We didn't think that rates would get much lower than that. Fast forward to when we moved to a new house in 2011, we secured a 4.75% mortgage for 30 years. Again, we had 20% to put down. We had excellent credit, and we thought that that rate was out of this world. And so I can't remember when we refinanced that rate, but it was several years later, and we refinanced to a 3.5% rate. Again, same parameters, but we thought that the rates would never ever get lower than that. And it seemed like we were right because we ended up selling that house in 2018 and moving to another house, and the rates were 3.75 for 30 with excellent credit and 20% down. So now here we are in 2020, and we've been in the coronavirus pandemic for the majority of the year. The 10-year treasury, that mortgage rates, that the 30-year mortgage rate tends to trend off of, has fallen to lows of around 0.68% as far as today on September 11th, 2020. That has driven down new purchase rates to as low as I've personally heard people getting them for 2.6% for 30 with excellent credit and at least 20% down. I've seen rates advertised lower, but I'm not sure if that includes points or very high fees. But we are currently refinancing, and we're doing a cash out refinance. We're still going to have well over or under 68% loan to value and excellent credit, and we are getting a 2.875% rate to do that, which is incredibly low. Again, I don't think that we'll ever see rates this low again in our entire lives. The reason I say that I don't think we'll ever see rates lower than that is because those numbers, anything that's in the 2 point, barely beats inflation as it is right now. In about the last 10 years, inflation has been right around or slightly above 2%. So, your 2.6s and 2.875s, give you half or so percent, spread over the rate of inflation. If the rate of inflation goes above the percentage of the loan, the banks actually start losing money on these mortgages. And so you can't get much lower than 2.6 when the policy of the Fed for years has been to try to keep the inflation rate around 2. Now, the policy of the Fed moving forward is to keep the inflation rate around 2%, but averaged over the course of time. So we may see years where it's 3 or 4%. Hopefully not, but it's a possibility. Now, the average rate of inflation since about 1913 has been approximately 3.22%. So as you can see, with average inflation, the mortgage rates that you're getting now on a 30 are under that average inflation rate. So if inflation did kick up to what used to be the norm, these loans would end up losing money. Another factor with why now is a great time to refinance your mortgage, Fannie Mae was going to enact something called the adverse market fee. It was going to be a 0.5% fee on refinance mortgages starting September 1st, 2020. That has been pushed back to December 1st of 2020, and the fee is to make up for what they said is likely coronavirus losses of up to $6 billion. So all things considered, right now would probably be the best time, possibly in history, to lock in a long-term debt obligation like a mortgage, be it 10, 15, 30. Right now, really, locking in a long-term rate this low is essentially getting free money. I do know it comes with a hefty interest cost over 30 years, but 2.875 or 2.6% is an incredibly low rate. And then also missing out on the 0.5% adverse market fee, is even more advantageous. I have no idea if that's a fee that will ever go away, but if you're familiar with how government and quasi-governments work, once something is in place, it typically doesn't change. So now if you're thinking about refinancing your mortgage, here's a few things to keep in mind, because we're going through this right now and there's some stuff to watch out for. One is loan costs. This includes things like origination fees and lender fees that they make money on directly. So these fees can be quite a bit different. From one lender for the exact same mortgage, I was quoted almost $9,000 in fees, and for the same loan with another lender through a mortgage broker, just about $2,000 in fees. And this is on about a $223,000 mortgage. So that's quite a swing. So shop around with your lenders. Another is to make sure that the offers that you're getting, that they have the same amount of points. And a point is 1% of the mortgage loan, and you can use that to buy down your interest rate. And essentially, you just pay interest up front for a lower rate ongoing. And if you do decide to purchase points, just try to do the math of what the savings on that will be to when that break-even point is, to see if it's worth it. And then anytime that you refinance, take into account what the costs are going to be, how much money you're going to save, or what the difference is if you're doing a cash out, how much more you're going to have to pay, if any. If you're making a significant interest rate drop, you may not pay any more per month. But if you are doing this for a money savings exercise, make sure that the fees and such that you pay up front come back to you in a reasonable amount of time. So for example, if you pay $3,000 to get the loan, and it only saves you $30 a month, it's going to take you 100 months to recoup that amount. So that may or may not be worth it to you for the 100 months to break even and all the hassle that goes along with refinancing a mortgage. Also be careful and cognizant to not extend the length of your loan, or at least if you do, that that you're doing that. If you've paid for 8 years on a 30-year mortgage already, and you take another 30-year mortgage, you're just restarting that mortgage clock back at 30 years. You may think about doing a 20-year mortgage, or some places will even do down to 22 years, right to where you were before. So just be cognizant of that if you just want to restart on a 30-year mortgage, because it would probably be quite a bit less a month. And you feel like you're getting free or almost free money. That's your prerogative. But just, be mindful of that when you go to refinance your mortgage. Guys, I hope you found this informative. If you did, consider subscribing to my channel. Hit the like button for me, and tune into my next episode.